Hello and welcome and hello. Thank you for tuning in to this Thursday edition of Un Poco Mas. My name is Danny Deals. You're watching Un Poco Mas, the show where we try to bring you just a little bit more. Sorry I haven't been with you in a couple days. Been making some ill-advised penny stock videos and just licking my wounds today. But guys, SoFi is looking really, really good. So I'm making up for all my losses and then some. Really, we made that round trip after earnings, but the good part was, usually they knock us down from that starting point, anywhere from, oh, I don't know. Let's see, guys. Hello and welcome. Welcome and hello. Hello and welcome. It's Un Poco Mas, guys. Thank you for joining me. Really appreciate it. Guys, Toper time check. It is what is it? Thursday, December, February 8th. It is 11:10 out here in the AM in beautiful sunny Los Angeles. The rain has finally broken. Absolute monster rainstorm going on out here. But anyway, guys, SoFi stock coming up today. As you can see, SoFi stock 2824. My opinion, anyway, SoFi management is just going a little bit overboard with the sandbagging. Um, you have to remember, I love Noto. I think he's a great executive. I think we have a really good executive team, but these guys aren't our friends and family. At the end of the day, they're looking out for number one. They're looking out for themselves, their own net worth, their own nest egg, their own family, their own kids, their own grandkids, future generations. Um, so if management has an incentive to make the stock price as high as possible in 2026 or 2027, they don't necessarily have the incentive to, give guidance really high and or even accurately or even slightly sandbagged in 2024. I feel like the guidance 7 to 8 cents is just a little bit crazy, given the history that we see. Stock pushing up just now through $8, $8.03, up 36 cents on the day, which is very, very nice. Volume is moderate, 32 million shares. So, and if you look at the volume, guys, these yesterday we had a shallow bull again. We had just this really, really uniform pattern that you see when the bears are in charge. They kept pulling the stock back down to $7.60, and it was basically range bound here in the 780 area, and it was pushing down. Obviously, they stopped some people out there at 750 on Monday, but it was basically kind of riding along this sort of mid 750s, and then it pushed up to made this sort of mesa or plateau or whatever you call that. If any of you guys were geography majors or minors, or maybe you were in women's studies or whatever it is, but if you kind of get past all this noise, guys, the chart is moving kind of on two tiers up and to the right. So filled the gap, as it were, came all the way, made the huge round trip on the pump and dump. As you can see, just textbook 20% SoFi pump and dump. Algo sells it off in as orderly a fashion as you can. The only thing I can ask longs to sort of take solace in is that these guys were shorting from 740 to 680 heavily, and they've never got back down to that level. And to really make money and get back out of that short, they need to be well down into the low sixes. And the great part is, guys, what have we been saying for months and months and months? That doesn't matter what we think, it doesn't matter how many shares we buy. We're not smart money. We're dumb money. Nothing personal, but that's what Wall Street refers to retail investors as, is dumb money. So if institutions don't come into the stock, and Dr. Bob, who does some really good TA, he's saying we need at least 50%. Of course, in a perfect world, we'd want 60%. But what are we starting to see, guys? Why are the shorts letting go? Why are the bears letting go? Why are they not pushing this thing down to try to cover their short positions at a profit? I'll tell you why. It's very, very simple. And also, thank you, Not a Lurker. Would like to say a huge Good morning. I love you. Hope you're well. The Princess J and Cutie. Also, good morning to Nod Lurker. Hello. Thank you for joining me, guys. Hope everybody is doing very, very well today. SoFi certainly is, but this is the key, guys. If you look at these filings, just going back, and you can see these for free on Fintel. Like the average price, and some of these things are locked up, but that's not really the key. It doesn't really matter how much they paid. If you go back to 131, guys, the filings just absolutely spike. And then recently, you can see the short volume starts to slow down. Remember, right after earnings here, or excuse me, right before earnings, they were all the way up into the 60s. And then right after earnings, you had these massive days, with the short volume ratio went down, but the aggregate total volume was just completely insane. And you're starting to see it kind of trickle back down. It made that real high spike in borrowing where they were controlling the price down to the penny after earnings. And then, what the hell did I do with my tap water? Lost my tap water. Um, but anyway, guys, again, welcome and hello. Thank you for joining me. Really appreciate it. See many of you familiar faces out there. God, I don't know, Joel. I'm no good with those predictions. I've never won a freaking Super Bowl pool in my life. To be honest with you, I really hate both teams. I'm a hopeless Raider Nation, Raider fan, so God knows we're not even within sniffing distance of the Super Bowl, and it's even more insult to injury since they are actually playing the game in Las Vegas. So, you know, I don't know who wins. I mean, I have a lot of friends who are Niner fans, and so I wouldn't mind seeing them happy. It's like I don't hate. It doesn't mean that much to me, guys. It's not like super personal in terms of football. I'd love it if the Raiders were in the Super Bowl, but that is a crack-induced pipe dream at best. So anyway, back to SoFi. So you see this lining up, and then it's not only important that you see these filings, the 600 shares don't really matter. It's who are you seeing? You're seeing some of these multinational companies buy in. 2.8, you see a filing. Credit Suisse, 2.8 million shares. You see another filing. Mitsubishi UFJ Kokusai Asset Management. If you guys don't know Mitsubishi, obviously you probably know their cars, maybe like musical instruments and stuff, but they are a giant conglomerate in Japan. They're one of the biggest companies in the world, heavy industry, but they're also huge into banking. So they're in for 347,000 shares and the increase in shares of 2,000%. So they had almost no position. Credit Suisse increased their position by 16%. You just see this time, and this is yesterday. People mentioned if you had a chance to take a look at Kyle the Stock Goats video, which I love the Stock Goat. I highly recommend his channel. He went over these things, and Dimension Fund was in for almost 4 million shares. That's a brand new position. Really nice to see. But you just see these are not the tiny positions. These are not the little nibble buys you see from ARK and insiders. Alpha Star Capital. This is 377,000 shares. They increased 39%. There's a couple decreases in here. But seriously, since these filings, since earnings, it's like just by my, eyeballing, it's like 80% increases, and some of them are really big. Like, you see Charles Schwab, they're in for 5.5 million shares, and they increased their position on this 2.6 filing by almost 4%. Cullen Frost sold their 250 shares. They sold 98%. So, no reason to really panic on that one, but anybody selling, it's relatively small potatoes. You see Truist buying and selling. Probably a lot of these companies are actually long short, so it's not exact, but you can definitely see the trend, guys. And that's that institutions, pension funds, foreign companies, foreign banks, funds of all descriptions basically are starting to buy into the SoFi stock. And this is only 1 week since earnings. Some of these bigger institutional investors take time, they digest things, they have a process. So I think by the end of Q1, we're going to see a lot more institutions, hopefully up at least, to that 45% level. I think we're probably in the 42-43% level right now because some of these filings kind of trickle in. You don't really know what's what till the end of the quarter. And sometimes the filings, for like Q1 will go back a whole quarter. So I don't know exactly what the requirements are for each type and each, there's different requirements for different types of things, but basically you can see you know, you can see the bottom line is that institutions are really starting to buy in. I used to check this all the time, almost, and this never looks like this after earnings, guys. It's always much, much more of a mixed bag with buying, with selling, with shorting. You're seeing the writing on the wall, and that's, institutions come in, that's where the nonsense stops. That's where the nonsense stops because the bears know if they push the price way down to play some type of reindeer games, they're going to get punished by one of these big institutions. Fidelity could just come in and, buy 10 million shares or whatever it is. If you guys don't know, Fidelity is the, biggest institutional holder, or I'm sorry, Fidelity. I'm such an idiot. Vanguard, excuse me. 68 million shares, and their filing increased by 28%. I wish Fidelity was in for that kind of shares. That was another stock I was thinking of. Sorry about that, guys. But anyway, guys, the volume is really nice. It's not too high. It's not too low. And the volume is not being controlled in that shallow bull pattern where each tick is the same and the algo is firmly in charge. What you're seeing today is a lot of variance, and these are all these big institutional buys coming into the stock. This is exactly what you want to see, is these continuous spikes coming in all day long. That's really, really what you want to see. No new ratings here, guys, in terms of the analysts. Let's see, any new news over on tip ranks? Of course, they're still running this Run for the Hills Morgan Fudley Midwest Values article on the front page. We had the raise from 8 to 7 at UBS. We went over this news before. Is SoFi Technologies to watch, losing half a point this week? 3 must buy fintech. So it's kind of up and down, but if you see the positive, you see the media buzz is supposed to be positive. Weekly articles, it's way positive. News sentiment is all the way toward the bullish side, and then you see what do they have on the front page? This giant bearish article. So it is what it is, guys. Let's get you a check of the live short interest and the overall short interest. Borrowing again yesterday, but the borrowing only crept up. They cover in the dark pool. They cover overnight. Not sure what's going on here, guys. Vortex loading a little bit slow, but so anyway, they're borrowing. They're not showing the borrowing. I don't know, but I checked it a little while ago. They were borrowing. I think it was like 3 million shares, but it wasn't an extreme amount of borrowing. There it comes. So again, 125 million shares short, 152 million shares on loan, utilization 53, short score 67. Not a lot of change there, but again, guys, just remember on January 5, there were 87 million shares on loan. Today, 1 month later, 151 million shares on loan. So you can imagine without that additional, 63 million shares of borrowing, the price would probably be up. I don't know how significantly, but it would certainly be up from where it is today. In any case, guys, Max Payne, again, $8 this week, so not shocking where we are in the price action. You see this sort of staggering on the calls, way too many calls out at 10. Not sure why people are buying those. That's open interest. Taking a look at volume, yeah, there's absolutely nothing out of 10. So those are all closed out. All the volume is 750 on the puts and 8 on the calls. So there's not much divergence. Bulls not looking to push the stock way up. Bears not looking to push the stock way down. Just sort of seem content to churn it here. Perhaps some covering going on. Obviously, some institutional accumulation going on. But again, you have to wait kind of till the end of Q1 to look at the filings and really see where we are with institutional ownership. And once we get up toward, over 50% mark in institutional ownership, all the games and all the pump and dumps and all this daily shark tooth pattern and a lot of that stuff will go ahead and stop. And I think we'll see the stock push up to where people say more the fair value is, like Morningstar is, 14, 15. Other DCF models I've seen, they're always, 10, 12, 13. Fair value estimates ranging anywhere from 12 to 15. So, um, basically, again, institutions coming in, smart money, stabilize the stock. That allows new buys to kind of actually affect the price action in a more natural way rather than being borrowed, shorted, dumped, churned, and then these games are played with because there's just too many options being purchased by dumb money. And it just feeds, you're basically feeding the beast, buying options that are ill advised because you're just feeding premium to the smart money and also to the smart money on our chat here. So, how's it going, guys? Welcome and hello. Thank you guys for joining me today yet again on another edition of Un Poco Mas. It is February 8th. It is not December or whatever the hell month I said before. February 8th, 2024. It's just, I don't know what the hell time it is, guys. About 11:20, 11:25. Um, so, in any case, sorry, guys, checking a few things. Okay, so we're looking at Max Payne. What else was I going to take a look at? Yeah, I wanted to go back to my original topic. Of course, I tend to get off topic a lot, but SoFi management sandbags too much. Like, what am I talking about in that respect? So, okay, guys, 805 pushing up nicely, low volume. The rug, and that's the thing, guys, how they always push down the rug pull. It doesn't work if institutions are there buying big blocks. If Credit Suisse is there, buying a huge block. If Vanguard is there buying a huge block, it just doesn't work because they can't push it down and churn or accumulate and cover. They push it down, they dump shares. They're losing money. They want to make money at the bottom off of returners, but then a bigger fish comes along. It's like Odell Lake, guys. If you've ever played Odell Lake, big fish eat little fish, big bank eat little bank. And, that's just the way it is. So these little hedge turders and these little shorts and these little punks, these little characters, these little, whatever you want to call them, like these guys that just play games and wring money out of retail in these trading stocks, that slams the door. Institutional money slams the door. That's all that slams the door. A lot of us were kind of saying, dreaming, which I knew is not the case, that it's net profit. It's not net profit. Making 2 cents isn't magical. What's magical is bigger fish, bigger bullies coming in and saying, no, now we're bullying you. You've been bullying retail for 2 years. Now we're going to bully you because you're upside down in your short position and we're not going to let you go back down there and cover and churn. If you push it down to 750, 760, we're just going to buy the hell out of the stock, just like they have been for the last, 5 days since the ER. It tells you what you need to know. The shorts are out of position. The shorts are out of position, and they've been wrong about these ERs all along. They're wrong there. But I want to tell you guys, why is Nodo sandbagging so much? Like, there's a new board game out. You've heard of Simon Says. Like, the new board game coming out is Tony Says. Or I had some notes up there. It's Nodo Knows. Tony Says, Nodo Knows. This is from the makers of popular board games. Excuse me, miss, I didn't order a salad. And also, honey, I can't find my car keys. Um, Fun for the whole family, of course. Domestic dysfunction at its finest. But anyway, so here's what I'm talking about when I say like guidance is so crazy to me. How they look at this. So here's the sandbag. Like they're talking about 7 cents. I mean, Q4 they made 2 cents. Now I know Q1 is expected to be weak, and maybe they'll make 1 cent there. But if they just make the 2 cents Q2, Q3, Q4, they're back to 7 cents. And I know Noto likes to beat and raise, and I understand that, but I don't think everything should be geared for, just being, erring so far on the side of caution that it just gives analysts, like I said, a cudgel, just a club to just beat the hell out of you with. They're like, why is guidance so weak? Why are you calling for, less than 2 cents a quarter at the bottom line when you made 2 cents a quarter in the last quarter of Q4, when your EBITDA margins hit 30%, when you're telling us all these things are hitting on all cylinders? And, that's why I'm saying, what could they go a little bit more aggressively? Now, listen to this, guys. In Q3, they grew membership by about 11%. And then in Q4, they grew membership by about 7.5%. So you have a ton of new quality members. Revenues per member. And this I'm not saying this is every single quarter, but just general trend. Revenues per member are going up. Products per member edging up slightly. Gross margins edging up. EBITDA margin is exactly where they want it. Net margins heading up, net profit heading up, incremental EBITDA margins are skyrocketing. And if you look at how badly they beat guidance on EBITDA and look at the Q4 beat on the top line, I mean, I respect they made such a huge beat, but if guidance were slightly more toward the accurate side, I think we might be getting a slightly more valuation from the street. Now, maybe I'm just, naive in that sense, but if Q4 2 cents, you just do that again, you're at 8 cents. That's extremely low. Why is it low? It's low because of the membership growth. And also, nobody's really talking about the internal savings from Galileo. They're talking about the external sales. Remember, guys, when management was high maybe a year ago, they're talking about how Galileo's going to save 20 million next year, 40 million the year after, and then it's going to save between 80 and 120 million dollars internally per annum, guys, per annum. So we're just starting to realize those savings. We're just getting actually, SoFi as a business switched over to Galileo. It took several years, guys. They have to ramp up. So, it is what it is in that respect, but the savings that we're going to realize 2024 and then especially 2025, 2026, you're talking about, could be $100 million in savings from having that tech stack. So it's not just the external fintech, the AWS of fintech, the AWS of banking, the AWS of payment processing. It's actually what it saves SoFi internally is going to drive up the margins considerably. So I just think the sandbag is a little bit too extreme for my tastes. Now, um, when we're talking about Tony says it's a game like Simon says, that's what I say about the tech. Now, you heard management's comments, and guys, don't make me get out the SoFi cowbell. It'll just alienate me from all my neighbors and get me evicted from my posh leaking office complex. It's quite an adventure when the ceiling caved in a little bit in the rain the other day. Um, yeah, Matt Flo, exactly. That's 12 cents just in the savings from Galileo, and they're talking about earning 7 to 8 cents all year. Help me, Matt Flo. Take me away, Calgon. Talk to these idiots, Matt Flo. No. So SoFi Bell, not a lurker. Thank you again. Ukeko, drink more tap water. Good idea. That's not a lurker's job, Ukeko. But it is appreciated nonetheless. Guys, this chart has just been beautiful. The way it kind of bounced off 750 and it's just been pushing back up. Okay, you gap fillers, are you happy? So anyway, what was I talking about? I was talking about Tony says, I was talking about the game, and then what did he say about tech? He's like, these RFPs are out. We brought new customers of all kinds of descriptions online just in the last 6 months, and those are going to pay dividends all of next year. He's like, these RFPs are bearing fruit. These guys know the company. And what I haven't heard from these bears, whether it be Midwest Values, or whether it be the Parrot Bowling Ball head, or whether it be the five head professor with where I keep my external office annex behind his eyes, where there's just so much empty space, or whether it be the Chia Pet who re-rates one stock to the negative, 6 times within one quarter. It's just obviously totally normal, totally legitimate behavior. Hey, let me I was looking at the five head, his ratings, and at one point he put in just recently he put in 3 sell ratings, 3 re-rates on SoFi. I think it was within 10 days. Not 10 trading days, but like 10 calendar days. This is, yeah, totally normal, totally legit. Most analysts, they re-rate or reaffirm or whatever, downgrade, upgrade, once a quarter at the most. A lot of analysts, a couple times a year. Um, so you call it like you see it. But anyway, um, so the basic thing I'm trying to say with tech, Noto is telling us specifically, when you hear him describe these things, they are specific real world things he's talking about that are actually happening. Customers already coming online, already paying revenues. Do you think Noto doesn't understand the growth as well as these two-bit greenhorn analysts they trot out? These bottom of the barrel, end of the bench, 12th man in the NBA, practice team, you know, just the douchers, the other guys, the B team, the C team, the D-list celebrities. These analysts are terrible. And they trot him out and they hit the SoFi stock. They bookend it. It's so predictable. 650, 654, 3. It's like, are you stuck? 4. Um, anyway, so it is what it is, but Noto's telling you where they're going to go with tech, and you have to believe he's either mistaken or lying to believe sort of where the bearish analysts are going. Just one more thing I wanted to touch on, and I'm going to get you guys out of here, get you on with your day. Another really good article. I'm not going to go over this whole thing. I just read it. It's Yenis Zorpanos. I always butcher this guy's name. Zaurpanos. But SoFi optimal entry point, February 28, 2024. This guy's a smart guy, so he goes over all the numbers that we already know. They grew their base. He's talking about that. Focus on what I really want to talk about is his focus on tech, financial services, how he thinks they're going to get there. He talks about his investment thesis. He talks about how the trading range between, that 675, 920 confirmed a lot of his theses. SoFi hits 7.5 million users, turns profitable. I'm not going to go through all this. You guys can definitely read this, but the quarterly mix of revenues looking a lot better. Net interest income grew significantly due to the company's strategic decision to hold on to loans. So that's very, very important in the deposits, and the fact that 90% of their deposits are coming from direct deposit. Their deposits exceeded their loan originations last quarter. These are good things. The bears are trying to paint these as bad things. They're not. But this isn't the part I wanted to talk about because, we've gone over all these before and how it's guiding for a little bit less in lending and however that's a good thing. The plan to originate less in this capacity, opting for a more conservative approach in anticipation of Fed rate cuts. It's a notable shift from 2023, originated 17.4 billion, marking a substantial increase from 13 billion in 2022. But despite the recent strong performance, conservative guidance for 2024 underscores SoFi's careful risk management and strategic caution. So they talk about they're going to rely on the technology platform, grew 11.8%, 352 million. Financial services grew 160% to 437 million. So there's a lot of strength there. And SoFi's telling you those are going to grow. Those are going to take up the slack of the lending. I think they're more than going to do that. They're positive at the bottom line. So this is a really key section. And if you're long, good evening, PC. Good evening, Parker. How you guys doing? Hello and welcome. Definitely do not like and subscribe. Parker is right. Do not like and subscribe. You'll instantly get a computer virus. Your tablet or your phone or whatever you're watching on will blow up. And you may or may not get herpes. No, you won't, guys. My show will not give you an STD. My show is just meant for entertainment, guys. I'm not like people are freaking out. I was just got absolutely chopped in half on a penny stock that I was hawking. I hadn't even made a penny stock. It's like, serves me right. People are making fun of me for I buy penny stocks with a tiny amount of my portfolio. I've been doing it for decades. I just really enjoy penny stocks. They should not make up any part of your investment. If you like them, put in like 2% of your portfolio and just, if you enjoy it, but don't do it as part of trying to retire, trying to make money. They're a fool's errand. And that was proven to me by, good catalyst, and then just absolutely being chopped off the knees. Stocks down 60% overnight on this deal by Roth Capital. Oh my God. But anyway, guys, so this is the key section I want you to read. Mastering interest rate fluctuations. So they talk about how SoFi controls their risk by hedging. Okay, it's important to note the company's interest rate sensitivity to understand its business more deeply. Management will have the discretion to strategize their hedging strategy based on expectations, and the change in rates may impact their fair value gain or loss. So if you adjust 100 basis points up, the fair value of the loans is going to increase 1.8%. Down, it's going to decrease 1.7%, which based on last year's revenue would amount to a gain of $277 million if interest rates decline 100 basis points, as many think they might by the end of, say, this year or probably early next year. But we have to wait and see, guys. The economy's been a little hot. Jobs number was a little bit hot, but inflation looks good. So we're trying to negotiate that, not if not a soft landing, a soft-ish landing, maybe a soft crash landing. What's up, Ken Megan 44? Um, immediately unsubscribed. Yeah. Yeah, that's perfect. You don't need antibiotics. Just unsubscribe, and whatever's ailing you will go away. But anyway, guys, I'm losing my voice, but I really want you to read this part about hedging, this part about interest rate sensitivity. SoFi is managing this with a fine-tooth comb. They can hedge the risks with interest rate fluctuations, and they do that very actively. SoFi is building in hedges against risk so they have stable profits, stable growth year after year after year. Also, read this part: SoFi's hidden value, a fintech gem in the traditional banking sector. Look at how their price to sales and price to book stack up against Hood, Coin, Square, PayPal. I mean, they're just the same as PayPal. They're growing like 30%. This 15% top line growth is just absolute rubbish. I don't know where Midwest Values from Morgan Fudley cooked up that bullshit, but it's fantasy land time, folks. I mean, like I said, added 11% new members, added 7% new members. The top line growth is going to be there. The bottom line profits are going to be there. I really don't see any reason SoFi won't make over 20 cents, this year. It's only 5 cents a quarter. I think by the end of the year, they'll be making, I want to say, 7, 8 cents a quarter. That's just my opinion, but I could be totally out to lunch. So they're holding on to loans longer. They're making more money. And listen, just read that yourself. I don't have time, but takeaway: looking ahead, SoFi aims to expand its tech and financial services sectors poised for scalable growth, indicating a strategic pivot away from more capital-intensive lending segment. This is going to be good for the balance sheet, guys. Good for the books. Take pressure off of us on this, loan book. The shift, coupled with a prudent hedging strategy against interest rate fluctuations, pardon me, positions SoFi favorably for 2024. Therefore, the company's blend of banking and fintech strength, alongside its strategic management of interest rate exposure, suggests a potential for enhanced valuation. Um, this guy, again, he's very conservative. Everyone who looks at these numbers, guys, likes this. Look at quarterly adjusted EBITDA, just jumping off the charts. Look at quarterly adjusted net revenue, just, jumping not off the charts, but a really nice increase there at 63 million, just quarter over quarter. So, SoFi sandbagging the hell out of this thing. Tony notes, he's saying Tony says, and these analysts are calling bullshit. They're calling shenanigans. You just have to decide who knows more, who's right, who has the track record of telling you the truth. People like the Five Head, the Chia Pet, Midwest Values, the Parrot, or Anthony Noto, Chris LaPointe. They've been accurate 10 quarters in a row all the time. They've been a public company, and just last quarter, the trend is our friend. It's unmistakable. SoFi hitting on all cylinders. Really like this stock, guys. We're at 806, 36 million shares traded on the day. Let me get you out of here, guys. Back to your real lives. Quick check of the live short interest. So they're returning 194,000 shares on the day. And one thing you'll notice, guys, every single time they don't borrow the shit out of the stock, it goes up. What's that telling you? On a real basis, people want to buy the stock. No retail or institutions wants to dump this stock at 747. Are you kidding me? This is a strong buy for these people. The institutions are buying day after day after day after day. My spidey sense is telling me a lot of these games might be over. We might finally see some light at the end of the tunnel that may not, in fact, be a train. But, famous last words, guys. And then they crash the stock again, FUD again. So I just think it's much, much harder to do with all of these institutions coming into the stock. But strange things have happened. Don't I know it? Once again, never buy penny stocks. It's the absolute stupidest thing you can do. It's fun and exciting, but then so's gambling. Just take your money to Vegas, lose it on a slot machine, and pay a prostitute to punch you really hard in the testicles, and you get sort of the same effect as you do buying penny stocks. I want to say a big thank you to Princess J, Cutie, and of course J Money not a lurker. My name's Danny Deals. The show is Un Poco Mas. The stock is SOFI Technologies Incorporated, ticker symbol SOFI. Hope you guys have a great day. I got a lot of work to do, got to get on it, and I'm sure you guys do. I will try to talk to you tomorrow. Have a great day. Peace. I'm out.